Hey everyone, it's Paul flying solo one more time with today's market talk. And I know that many of you will be looking to know, hey, Paul, what is going on? The stock market is crashing. People are freaking out, whether it be about coronavirus or equally about something that is also going on that is in some ways unrelated to coronavirus that I'm also going to go over, which is that the price of oil has crashed. And so today I want to, number one, start with just letting everyone know that from my perspective, from our perspective, the America 2.0 bull market that we've been telling you about, that we've been invested in for nearly 4 years is still absolutely, completely, 100% on. And I'm going to tell you why. Even last week, as the markets were declining, our portfolios in many cases were up. The Profits Unlimited portfolio was up, the True Momentum portfolio was up, the Extreme Fortunes portfolio was up. And we also started to see in our work that we were doing that there was actually quite a bit of buying going on in a number of America 2.0 stocks. In other words, the stocks of the new, we're seeing people slowly coming to nibble and buy small bits here and there. And so I want to reiterate that I am still bullish, I am still optimistic, and I am still positive. And many of you I know will say, but Paul, look, my account is down 5%, 10%, 15%. This stock is down 5%, this stock is down 10%, this stock is down 15%, this stock is down 20%. And I understand what you are saying. However, just remember that in 2018, we saw stocks truthfully decline by as much as 30, 40, and even in some cases, 50%. And you know what? They came back. And they are significantly higher today where they were than at that bottom in 2018. So I just want to make it clear that stock prices are volatile. And here is why we are going through what we are going through today. So it's just so you understand what is going on. Some number of people at very large asset management companies, in other words, people who manage billions and billions of dollars, feeling the pressure that they will need to justify what they do to their clients, are selling as much stock as they feel they want to all at once in one shot. Now, the nature of any market is that if you come to sell everything all at once, as soon as people understand that, you are going to get terrible prices for it. So if everyone wants to sell all at the same time, the buyers will simply sit back and say, hey, you want me to buy this when no one else wants to buy this? Well, I am going to offer you a horrible price. I am going to offer you a terrible price. And the decision that you have to make, if you're sitting today, and I understand that the panic everyone is feeling, and I totally understand it, whether it be about coronavirus or about oil, whether it be the markets, or just worrying in general, your decision is, should you join these people? Do you have a need to join these people and take terrible, horrible prices that, based on history, based on our understanding, whether it be of coronavirus, of markets, of economies, that we know with a good amount of likelihood that the prices are going to be higher 6 months out, 12 months out, 18 months out, 2 years out, 3 years out. And that really is the decision that everyone has to make. Do you want to take terrible prices to simply join in, or can you hold on? Can you hold on? And I said this last week, and I'll say it again. Markets will always, always come to test you. They will always come to test you. There is never avoiding that. They will always come to test you. And you will need some fortitude, some tenacity, some courage, some belief, some conviction, some trust to make any kind of money. I usually say big money, but I will say to make any kind of money, however you stay in markets enough. And I believe in the America 2.0 bull market. I believe that it can make an enormous, astonishing amount of money. And so I would tell you, if you can, find the tenacity, find the fortitude, find the courage, find the trust, find the conviction to stay in. Now, we guide our subscribers using the rules of the game. And for some folks that only own one stock or two stocks, just understand that sometimes even a fairly small dollar amount can be a very large percentage. And just like markets can go down very quickly, they can also turn around and go right back up. They can soar higher, just like they did earlier this year. Just remember, it was barely 2 or 3 weeks ago where markets were making new highs and everyone wanted to buy in. Today, we are going down, everyone wants to sell. So going to the exact things that people are worried about. So let's talk about coronavirus. So I tweeted on Twitter over the weekend this article that's actually written by, co-authored by one of the heads of the National Institute of Health. This is one of the leading authorities really on health and on public health that's out there. And so in this article that you'll see that I'm going to put up right now, you'll see that he talks about, or the authors in this article talk about the fact that one reason why the mortality rate is calculated to be so high is that so many people that actually have this virus today are undiagnosed and they go through it with almost no sickness. It's called being asymptomatic. And so I'm just going to read a quote here that's the one that I'm going to put up. It says, if one assumes that the number of asymptomatic or minimally symptomatic cases is several times as high as the number of reported cases, the case fatality rate may be considerably less than 1%. In other words, significantly less than what anybody's projecting, anybody's thinking right now. And then it goes on to say, this suggests that the overall clinical consequences of COVID-19, which is the scientific name for coronavirus, may be ultimately more akin to that of a severe seasonal influenza. In other words, the regular flu, which has a case fatality rate of approximately 0.1%. So the reason why I'm bringing this up in this very scientific way is that this is a paper that is published in perhaps the most prestigious medical journal in the world, the New England Journal of Medicine. It's written by very, very credible authors, including the head of the NIH. His name is Mr. Fauci. And he's telling you that when you look at it in full, that in the end, when the panic is over, in all likelihood, the coronavirus will have a fatality rate. In other words, number of people that are going to die, that is going to approximate what is something that we go through on a regular basis year after year through the regular flu. So in other words, the projections that are being made for very, very extreme outcomes on coronavirus, I believe, based on this article, based on the work that we're doing, are very, very unlikely to come true. In other words, our economy, our markets, our society will pass through this and we will come out on the other side, and then we will start to go back to doing what we used to do. And this panic, I believe, will pass. And markets will rise, and they will then, I believe by the end of this year, rise to new highs. I know that seems impossible and incredible today. However, that's what I believe. And that's what I told people would happen in 2018, and that came to pass. So that's what I would tell you with respect to coronavirus. Now, with respect to our economy, just to let you know that people are doing this kind of work, and I've been reading this over the weekend, which is that people have modeled what would happen, let's say, if the coronavirus went on for an extended period of time. Even in an extended case scenario, what we are seeing is that the economy does not actually go into a recession. So when we model everything, whether it be from the coronavirus or from the economy, I would tell you that the right move is to endure through this volatility, to be strong hands, and that the markets will come back. And when it comes back, they will hit new highs. And people will look back at this period and wish that they either held, if you're already in and have no cash, endured through it, or if you have money, then I would tell you that a great place to put your money into is in America 2.0 stocks, New World stocks, Fourth Industrial Revolution stocks. And This week, yes, we are actually telling folks about one of our incredible services, Extreme Fortunes. This is a service that focuses on small, innovative companies that are at the forefront of the fourth industrial revolution that is remaking America into America 2.0. Click on the strong hands above, and that will take you to a page that will tell you all about the service, all about the phenomenal stocks that we focus on in this service. And it will give you a number of ideas of these small, innovative companies that you can look into beginning to buy using what we call the rules of the game. I would also tell you, for those of you that are looking just to get started and say, hey, Paul, I just want something. Well, check into the video that I made last week, my Bold Profits Daily, which came out on Tuesday, where I told people to buy into sticks. This is my acronym. That is a shortcut of 5 ETFs that will get you into the heart of America 2.0, get you a little piece of it, buy in slowly, because you know what? Stock markets are volatile. They bottom out slowly over time. It's usually a bit of a rounded curve to it, and each stock bottoms out at a different period of time. So that's my message for you, which is that I understand why people are afraid. However, the facts are in our favor with respect to coronavirus. The facts are in our favor with respect to the economy and the markets. And ultimately, I believe that once we go through this, markets are going to head higher. And remember what I've been telling you for the last couple of weeks, which is that markets will anticipate. In other words, people will want the all clear sign. However, the markets will anticipate that and move higher ahead of that. So you want to start buying really at this moment when prices are low, prices are down, people are in a panic. And then we've given you a number of ideas in terms of what you can look at. And that's really my message for you today. Please, if you can, stay in. If you're looking to buy in slowly over time. And Amber and I will be back next week with a market talk. And until then, this is Paul saying